The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got about 30 minutes to go until the start of trading, and we got a mixed market to kick things off right now. You got the S&Ps negative by just 3 points. We've had some volatility in both directions to kick off the 2022 trading year. Right now, you're coming into the opening bell. Pretty calm action with the S&Ps negative by just 3 points. You're trading at 47.80. All things considered, bumping up basically against all-time highs, 48.08. Early yesterday in the first half hour of trading. NASDAQ 100, quite the sell-off yesterday, man. You were trading at 16,550 coming into the opening bell. We trade down 400-plus points to 16,139. The market charges higher on the into the close last night, but we've given it back overnight, basically just sitting at this lower area that we were in. Pretty remarkable. Since about 11 a.m. yesterday morning, the market accelerates right out of the gate at 9:30 for the first hour and a half of trading. Man, those tech stocks got pummeled. Since then, kind of just sitting right at that price point, right at around 16,200. You get the Dow. Talk about some strength yesterday, pushing 36,804. Within a stone's throw at 37,000. Today, we're up by 3 points right now in the Dow. You got the Russell up by 0.7 of a point. Yeah, barely. So Russell flat at 2267. Bitcoin right now trading at 46,370. Crude with a 77 handle. We were just above 7807. Great day to talk to our man Teddy Kegstad. We haven't talked to him in a couple weeks. With Christmas and New Year's, we'll be talking to him at 40 past the hour from forex-trading-unlocked.com. He loves to talk about that crude market. He's been talking about $100 crude for a while. Quite the pullback we had, man, going back to where we were just in December with a 62 handle. And just like that, we're right back to $77 on crude this morning, up another 70 cents. You got gold catching a bit as well. Gold up $11 at $18.26. Gold. You put the 15-minute action on there. Quite a sell-off on Monday's action, but reclaiming some of those losses on Tuesday and almost getting it all back on Wednesday. We're right back to almost where we were on the open on Sunday evening on futures, and we jumped to notes and bonds. Man, you talk about a move to start off the year. You got the 10-year right now basically flat after quite the days yesterday. Monday, things really accelerated. You had the 10-year down almost a full point. That move continued on yesterday's action, and we jump over to see where we're trading at in terms of a yield right now. You're talking about a yield on the 10-year of about 1.65%. We started the year off about 1.5%. We were on our way to almost 1.7% yesterday. Right now, you're sitting 1.653 to be exact. The yield on the 10-year. We jump over to the volatility index this morning, the VIX, sitting at a very comfortable 17.15. A little bit of volatility the last 2 days, but all things considered, you're talking about chopping around between about 16.50 and 18 maybe on the high side. Not too much volatility premium in this market right now, as basically we're sitting at almost all-time highs. All right, the economic numbers started off today. We get Fed minutes today as well, but we got ADP private payrolls at 8:30, and quite a number, man. It's 807,000. Now, let's just go back to the chart and take a look real quick. You almost can't even see where this number comes in. There's 8:15, so we're talking about 15-minute bars. There's your 8:30 bar, folks. Let's zoom it in even more. There is your 8:30 bar. When we get ADP private payrolls, you had about a 2-point swing in the S&P. Just remarkable, especially ahead of Friday. We get non-farm payroll. Now, sometimes there is some divergence in these two numbers. We get the ADP number on Wednesday. We get non-farm payrolls, the government number, on Friday morning at 8:30, about 48 hours from right now, with strong numbers, broad-based across goods, producers, and services. You break it down, 807,000. You're going back to basically May, the highest number, and the estimate was only 410,000. Let's see, downwardly revised 505,000 gain in November. Market was looking for 410. Broad-based as goods producers added the strongest reading of the year. Service providers dominated growth. That's ADP chief economist Neela Richardson. Industry breakdown. Trade, transportation, utility payrolls, 138,000. That's the biggest since September of last year, not so much anymore. It's 2022, September of 20. Manufacturing employment up 74,000. Construction payrolls climbed 62. Professional and business rolled 130. Service provider employment 669,000 in December, the most since June, led by, not surprising, leisure and hospitality companies with more than 500 workers added almost 400,000 jobs. Small businesses adding about 200,000 jobs in December. That's the most in 6 months, though. Private payrolls represent firms employing nearly 26 million workers in the U.S. So you can see the slice of the pie that they have there. In terms of 26 million workers, they are a good representation, but sometimes there is some divergence in those numbers ahead of non-farm payroll, but a good kickoff to kick things off in terms of where we go ahead of Friday's number. All right, let's see. Where do we want to go? We got a lot of action to go this morning. Let's see what we got here. Yeah, let's talk about this. Wells Fargo talking about it's good to have your spikes up, folks, and at least consider what you could face in the coming year. We've had quite a 13 years in this market, folks. You're talking about the S&Ps rising from 665, 666 to a price level of about 4,800 over 13 years. We've only had one negative year in that time in the market of a negative return of something like 4% negative, 4.8% negative, I think, in 2018. Point being, it can't go on like that forever. It's almost just the law of averages. At some point, folks, you're averaging 16% or something like that over 13 years. At some point, you should revert to the mean a little bit. Wells Fargo strategist warning S&P 500 will drop 10%. I mean, if you drop 10%, that's almost putting it on par with like a 15% return last year instead of a 27% return last year, right? All things considered, considering the pandemic we're going through, not as bad as some feared, especially when you go back to the depths of almost 2 years ago now, which is remarkable, when the market plunged in March of 20 when the pandemic struck. U.S. stock investors should brace for a correction in the upcoming months. That's a strategist from Wells Fargo joining a chorus of warnings that Wall Street is in for a bumpier ride after last year's powerful rally. Yeah, I mean, any year is almost going to be a bumpier ride than last year when it was straight up. Pullbacks will likely be more frequent in this choppier equity market. That's Christopher P. Harvey leading a strategist note to clients, forecasting a 10% drop in the S&P 500 by summertime. Ultimately, the bend but not break market mentality finally fails investors in 2022. Equity benchmark is trading near record high after delivering 27% last year. And yeah, you're coming into a year with a lot in flux right now. Number one, we got rate hikes coming, 3 of them probably, and 3 of them coming next year. We have asset purchases diminishing. We have inflation still persisting. We have supply chain issues still persisting. There's a lot of volatility out there coming down. A combination of decelerating growth, hawkish Fed, peak pricing, and a belief that longer-term U.S. growth has not improved drives multiple compression and frustrates bulls. You don't want to have the multiple compression going on in those growth stocks, man, because they got some multiples right now in a big way. Margins peak as pricing power fades, labor becomes an even bigger seller's market, and consumer demand normalizes. That's kind of a bare worst case scenario, right? In terms of you got margins peak, pricing power fades, labor becomes a seller's market, and consumer demand normalizes. The silver lining in their gloomy outlook is that the slump may prove to be short-lived. I mean, even the bears in this market say, guess what? Following a red wave of midterm elections, they forecast will hand control of Congress to Republicans, and the market's going to finish higher. Even the bears in this market say, guess what? Everything's going to be okay because the market's going higher. Stay tuned, folks. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. The S&P is negative 2 points right now. We got the NASDAQ 100 negative 68, the Dow and the Russell barely in the positive. Let's jump over to our man, Kevin Hincks. Every trading day, folks, noon Eastern time, fast market on the TD Ameritrade Network. Kevin Hincks, Tom White, the team, they break down the day's market action, walking you through hypothetical trade setups as we come into a new trading year. We got some economic news. We got earnings starting later this month. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, really good ADP number this morning has got the market kind of holding where it was overnight. Now, the NASDAQ futures are still a little weak. They're down about 0.4, but the Russell and the Dow have gone positive, Tommy, and the E-minis are, we'll call them unchanged. So, yeah, a big beat in terms of the ADP. They were looking for about 414,000, comes in 807,000, Tommy. So here's a scenario that your listeners should understand. Yesterday's JOLTS number, they were looking for north of 11 million jobs, comes in 10.5 million. That's a 500,000 jobs drop, right? It's possible with this ADP number and that JOLTS number that the migration be out of off the sidelines and into the workforce might be starting to happen, Tommy. It's starting to show up in some of the data. And if you think about it, the lion's share of this ADP number, 669,000 jobs, Tommy, were in the service providing sector. Leisure and hospitality, the lion's share of that, 246,000. So that last part of the economy, the people that were sitting back at home, leisure and hospitality, they seem to be starting to migrate back into the workforce, Tommy.
Yeah, pretty startling number, man. Over 800,000. I think I was reading about, Kevin, I think ADP's got something like 26 million workers. So talk about a slice of the pie. We're a decent representation of the whole country. And yeah, over 800,000, like you said, great point, leisure and hospitality. Pretty cool in December. Now, obviously a big month for leisure and hospitality. You got Christmas, the holidays, school vacations on top of it. But like we talked about yesterday, Kevin, kind of, a variable out there in terms of the Omicron variant and how that was going to weigh on earnings, but pretty cool, man. You come over 800,000 with leisure and hospitality just rocking. Really interesting, I thought, Kevin, how the market, talk about digesting it, Kevin. I couldn't even find on this chart where that number was on the S&Ps, man. You're talking about a range of like 2 points on the S&Ps as it digests that number. So is it really just waiting, Kevin? Now, we get Fed minutes today as well, which should be pretty cool. See if that hits the market at all in terms of their December meeting. But then, of course, we get the main headline Friday. So when you see a market that on that big of a beat, Kevin, on such an important economic number, there's obviously 400,000 extra jobs on a private payroll basis for the month of December, but the market doesn't even budge. Does that tell you that it's kind of waiting for Friday's number? Or what do you read into when you have an S&P move 1 to 2 points on a number like that we got this morning?
Well, what you see, there's a big move going on here, right? As interest rates have moved up to 168, now they're sitting about 165. They hit 168 overnight, though, Tommy. Remember, we talked about how significant that 1.69 level was in the 10-year. And you're seeing the effects of that, right? When I notice a market, Tommy, that is the Dow is up, the NASDAQ is down, so one indices up, one indices down, but the S&P is relatively unchanged, that tells me that they're rotating. They're rotating out of the information technology, communication services. Because of higher interest rates, they're rotating into industrials, financials, some energy, all other parts of the economy. So when I see one index up, one down, but the S&P unchanged, that screams to me that they're rotating, Tommy.
Yeah, it's a tough case to argue against what you're saying, Kevin, because, man, some of these tech stocks, man, I just jumping around, even some of the biggest out there. Now, we talked about yesterday, Apple's its own animal, man, but they pulled back yesterday even, but they are their own animal. But Microsoft shares, for instance, man, Monday we're trading at 338, we're trading at 326 yesterday, we're trading at 327. Salesforce, great company. Salesforce, man, talk about some volatility on some of these growth companies. You were almost at 358 at the open yesterday, Kevin. You're going to open it 258 yesterday. You're going to open at 238 today. So these growth companies, as you're talking about, even with the S&P, Kevin, it's almost remarkable that we're sitting 25 points away from all-time highs. It seems like the rhetoric here with all the negative action of some of those FANG stocks, you wouldn't almost even realize that the S&Ps are literally bumping up against almost all-time highs that we made when? 24 hours ago, Kevin. It's almost hard to remember that 24 hours ago we had the market all-time highs. Just because of kind of the rhetoric, it seems like the stocks that get the most limelight are those stocks that are getting a little bit of rotation out of the market right now. We're talking about Microsoft. Even Apple had a little bit of a negative day yesterday. Fed minutes, Kevin, I want to talk about real quick. Are you looking for any action for the Fed minutes today as they come out with their December meeting minutes?
Well, I don't know if we should get movement because these are comments and things made in the past, and they're probably stale now. Nevertheless, never ceases to amaze me that the market does move off these Fed minutes. So, yeah, I would be cognizant of that when they come out this afternoon, but the market shouldn't move based on that. The Fed is now so transparent that we really know everything that happened at the Fed meeting. Nevertheless, they're going to release the minutes, and the market will react. I just wouldn't personally react that way.
So with all of that in mind, Kevin, what are you guys going to be talking about on Fast Market coming up at 12 Eastern Time today?
We're going to look at a bunch of names. Tom White and I are looking at topics. We're going to trade Salesforce today. We're going to trade Bed Bath & Beyond that has earnings coming up. And then we'll probably look at some of these other names like Adobe or some of these other names that are getting beat up early in the year. Why, Tommy? Because when they beat these things up, they don't stay down very long, and they snap back eventually. So if interest rates are peaking here, or yields, right, around this 169 level, if they settle around this level, these are all going to be in good pricing levels. So we're going to look at some of these beat-up stocks earlier in the year, Tommy.
It makes me think of, Kevin, a company like FedEx, because, of course, we chat with you every Tuesday, Wednesday, Thursday. I remember some of our conversations going on when FedEx couldn't find a bid for about a 3-month period from June till September of last year, man, and we were talking about maybe that's one of the buying opportunities, and quite a rebound FedEx has had, man, from about 220 back in September, and you're pushing 265 today as we open up on FedEx. But, man, quite a reversal. As you talk about, man, it's really remarkable, Kevin, with a market that is just all-time highs on the S&P. We're pushing almost 37,000 on the Dow, but there are so many of these companies that have had some decent pullbacks. Salesforce, as you mentioned, one of them, man. We have Salesforce in my newsletter. I'll be watching your program today, Kevin. Quite an acceleration up to 311, but man, they've paid a price since then, back to 237. Closed yesterday at 248. Some of these growth stocks, a recalibration for sure. Kevin, we appreciate the conversation, man. We'll be watching the show today, as always, at 12, and you have a great one, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, tune in 12 noon Eastern time today. It is a great time to check out the program as always, but you're kicking off a new trading year. We're coming into some economic indicator numbers. We got a VIX right now, folks, all things considered, sitting at about 17. When you take a look at this volatility index, you see, we're bumping up against pretty low numbers that we've seen for the last year. You see the highs on this chart, low volatility coming into a period that you could make the case that we could see some volatility for the next 3 or 6 months. The VIX, very short term, though. As we know, it spikes in one day and it gives it up in one day. But man, quite a year. We're living in interesting times is the expression, folks. But not often do you come into a year at all-time highs, going on a 13-year bull market run. And guess what? We got rate hikes coming. 3 of them this year probably. 3 of them next year probably. And we got inflation at record prices. Stay tuned, folks. We'll be right back for the open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right. right, we got markets open, folks. We get the S&Ps right now negative by 2 points. The rotation continues. NASDAQ 100 negative by 0.5%, and the Dow up 1/10%. You got the Russell up 0.2%. Let's jump around to some of those FANG stocks as we open the market. You got Apple basically flat right now, trading at $179.75 yesterday. $3 trillion company. Today, just under that mark. Microsoft, I talked about with Kevin, man. Yeah, continuing the slide, man. Down 1.1%. Look at this acceleration, folks. There is a rotation happening, and it is happening in lightning speed to kick off the year. Microsoft down. Google, a little bit of a different story, down 110%. He talked about Salesforce, man. This stock, tough go around, down 5.5% right now. They're a growth company. They're getting punished right now when you got high yields, rising yields. You got Salesforce down 5.4% on those numbers out there. We jump to some of the biggest fan stocks out there. Tesla, man, remarkable. The bid that has stayed with Tesla at $11.50. You're up 0.2% for Facebook. Tesla. We jump to Facebook. Meta down about 0.6%. Now, what's Sony? Sony's an ADR, right? SNE? Yes, SNE is Sony Corp. They're not coming up. Is that Sony? Maybe somebody in the den can help me. I think it is. Sony Corp, SNE. Yeah, maybe it's just slow. SNE? So SNE. There we go. All right, it's not coming up, but the point is, we're going to talk about a little virtual reality again. That's my theme for the week, because the headlines just don't stop. Facebook shares with Meta down 0.75%. Sony unveils PlayStation VR2 headset and new immersive Horizon game. So this article out last night, I've been talking about, folks. There are VR virtual reality articles, many of them every single day. I feel like we're reaching a tipping point right now. Okay, Facebook probably loves it because this is what they want. They want all the focus off of them and how they just destroy young people's psyche on Facebook and Instagram, whether it's young girls, young boys. Their social media experience is horrible. Okay, that's my experience. That's my opinion. It is horrible. But this is a whole new world, man, talking about virtual reality. I got an Oculus 2 headset for Christmas, as I'm sure you're all familiar with, as I've been talking about. But every single day there's new ones. Now, this one talks about Sony. Now, the VR2 headset, they got a new game out there. This has to be used with the new PlayStation, okay? It's the PS VR2 charging up the platform's appeal just as metaverse hype intensifies. They introduced a teaser video. And the PlayStation VR2, an upgraded headset, VR2 Sense controllers, increased visual fidelity, head and eye tracking, as well as vibration feedback built into the headset. You can see how this is going to go, right? They're tracking your eyeballs in the headset. They have vibration feedbacks built into the headset. Eventually, you're going to be wearing a suit, okay? And they're going to have feedback built into that suit to mimic what you're realizing in VR. The new hardware targets ever greater immersion and can prove among the popular gateways into metaverse offerings from the likes of Epic Games. Horizon Call of the Mountain, deployed in part by Sony-owned Guerrilla Games, will be among the first to tap into the increased capabilities of the new PSVR 2. Just remarkable. The next generation wired gaming goggles plug into the PlayStation 5 home console, so they plug right into the home console. All right, and this is going to be the tough part, is that how does Facebook compete if you have Sony plugging into this enormous PlayStation 5? Seems like the computing power would exceed what you can put on someone's head, at least for now, if you're plugging into a console of some sort. You're going to have OLED panels, increased resolution from the first generation, a maximum refresh rate of 120 hertz. The company didn't elaborate on the pricing or release date. The last one they came out was 2016 for the PlayStation 4, and they're gearing up for the incoming successor to be a large success. Still, Sony's release of the new product may be challenged by chronic chip shortages and supply chain disruptions that have pushed electronics companies and automakers to delay or cut back productions. Yeah, chip numbers in December, how about 25 weeks? That is the delivery time for chips, rising again in December, the longest wait time since tracking began in 2017. But pretty cool how this is ramping up. You're going to have Apple coming out with a similar deal. Apple's headset probably going to be self-contained. You're not going to have to plug that one in. Their headset's supposed to come out either late this year or potentially early next year. But VR is heating up in a big way, man. You're seeing it. They got a game out there specifically designed for it. And yeah, you're going to start seeing more and more and more of this coming out, folks, between the big dogs. And that's going to be Meta, Facebook, that's going to be Apple with their headset, and Sony with their headset. Those are the three right now that are coming out. Pretty cool when you think about where the future will go from there. All right, talking about the stocks always getting headlines. 2 Amazon articles popped up interesting as you drive forward with technology. The Ring unveils a sensor to alert if home window is smashed. It's just pretty interesting to think about how everything is going to be tied into the Internet of Things. So you got Amazon's Ring. They're now going to be able to realize if a window is smashed. It's a $40 sensor called the Ring Glass Break Sensor. Detect if a window is smashed or cracked from as far as 25 feet away. So you put them in your house in an effort to beef up that home security for Amazon and their Ring. The other one Amazon's doing is a lot bigger probably, and that is that they are teaming up with Stellantis on auto software and delivery vehicles. Amazon almost trying to corner the market on electric vehicles. I'm kidding a bit. But they're targeting $23 billion in software-related sales by 2030. It's only 8 years away. 8 years away, a long time, but $23 billion is a lot of money. Cloud services for vehicles there. All right, so that's the maker of Jeep, Chrysler, Fiat brands will work on digital technology with Amazon and use its cloud services. According to a joint statement, Amazon will also be the first commercial customer for the new Ram ProMaster electric delivery vehicle due in 2023. So they're already going to be the big customer for Rivian, right? They got, 100,000 vans are going to be trucks that they're going to be getting from Rivian. But now they're teaming up with Stellantis. They're going to be developing software, and they're going to make sure that they are the ones that are going to be the first commercial customer to get the Ram ProMaster electric delivery vehicle. How do you compete with a company like Amazon, where they are spending billions upon billions of dollars today for electric vehicles they will be using in a year from now or 2 years from now? We will create the foundation for Stellantis to transform from a traditional automaker into a global leader in software-driven development and engineering. That's the new Amazon CEO talking. Software is everything, folks. The announcement at the Consumer Electronics Show, Consumer Tech Show in Las Vegas, comes after Stellantis outlined plans to generate about $23 billion in extra revenue from software-driven features in its vehicles by the end of the decade. On Wednesday, let's see, they're working software solutions for the digital cabin platform called STLA. I mean, it's just all technology. Digital cabin platform.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have markets pretty calm to kick things off right now. The S&P minus by 3 points right now. You're looking at a Dow positive by 28. The Russell negative by 3. NASDAQ leading the way in negative territory, down about 0.5%. The NASDAQ off 76 points. Let's jump over to our man, Teddy Kegstad. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. We talk to Teddy every Wednesday at 40 past the hour. Teddy Kegstad, Happy New Year, man.
Happy New Year to you guys as well.
So, we haven't talked to you in a couple of weeks, man. We've had a few things going on. We got new all-time highs, of course, in the market, man. We got a little bit of potential rotation going on with the tech stocks. We got quite a strong ADP number this morning, Teddy. Where do you kick off in the world of Forex this morning?
Well, I think we should talk about the U.S. dollar yen. We finally hit the 116 price target yesterday. So, 122 is my longer-term objective. And I'm riding that way, baby. I think that yesterday's rally definitely showed that when it comes to that currency cross, the bull is definitely off and running for 2022. I don't think this is a spike that you're seeing. I think you're going to see the trend continue over the next couple of weeks, especially with the way the 30-year and the 10-year sold off over the last 2 days.
Now, what is driving, in your opinion, Teddy, the action on this pairing? Because getting ready to talk to you, I take a look at some of the Forex pairings, right? I'm always watching them, but especially on Wednesdays, getting ready to chat with you. And not a ton of action in terms of some chop in there across some of the pairings. But man, the dollar yen, it is, that was the one I was ready to talk to you most about, because I think that's probably the biggest move we've had on some of the pairings, as opposed to just kind of some of them chopping around a little bit, like the euro or something like that.
Well, I think that one of the reasons for this is that the yen is very sensitive to our interest rate environment, which is a factor of currency pricing, as well as the oil market. So if you look at how oil rallied Monday and Tuesday, and the bonds in the 10-year, they tanked, especially very hard yesterday, pushing some extremes. So that's where you got that big elevated rally yesterday. And you can tell by today that oil is up slightly. The bonds are up slightly, I think they were up like 10, 12 ticks when I looked at them like 20 minutes ago. So they're kind of like, right now, they're chopping around and kind of just stabilizing. So I think that's why you're seeing the little sell-off off of this new move high from yesterday. So you can kind of see that those relationships where they go, the U.S. dollar yen is kind of going that same direction. So we have oil numbers today. So if we see oil all of a sudden rally and start pressuring resistance, and if you see the 30-year and the 10-year start to hit support again, I would expect to see the U.S. dollar yen be challenging the highs from yesterday very, very quickly.
So let's take that opportunity to jump over to crude. Quite a run, man. I mean, you look at where we've been, Teddy, and I know you know, but you're talking about a move from $62 to up to $78. What's that? That's a $16 move. You're talking about a 25% move in crude, basically in just over a month from that low we got at $62 coming up to $80. Do you see? I know you're a long-term bull. I'm assuming that really hasn't changed coming into the new year. But where do you see some potential resistance? Is it 85.41 the highs we have up there from November? Is it $80 a round number? Where are some numbers on that crude chart right now at 78.21 that you look for?
Okay, well, I think that it's very likely that we're going to pierce the $80 level within probably the next week or so. Now, as far as do I think we're going to have a really accelerated rally to the upside? Probably not, and if we do, I don't think it's going to be sustainable in the sense that I think you're going to start to see a lot of volatility as we cross the 85, pushing the $90 a barrel mark. See, here you got to realize is now we're already at the threshold now. If we didn't have inflation at all right now, let's say we were running at 0% inflation for the last 2 years, the price of gas right now, we're pushing that threshold. Once you start to see $4, $4.50 gas, you're really going to start to see a lot of people start to make decisions. Now, if you have $4.50, $5 gas, I've been saying this for a year. I'm like, you just wait. We're going to get to this area, and overall, over the next couple of years, we will see the $150 level. We're going to be where we were back in the early 2000s. The only thing is now we're coupled with inflation, and as we hit this, you got to realize it's going to start to make people make choices. You're going to have You're going to have a slowdown in the economy. There's not going to be the consumerism going on moving forward with these pressures in the market. I just can't see it now. If we get some sort of they start printing money and if we go into COVID lockdowns again and they start pumping money into the system, short term, that's going to hold stuff up. But right now, brother, this printing money has to come to an end because we're starting to really get into some serious issues with how the economic numbers. Remember back in the spring of last year, I told you that moving forward for the next couple of years, you can forget about your basic accounting. It's going to be the big economic numbers now that are driving all of the markets, not just the currencies, not just the interest rates, but that's where people are going to be looking for true direction because the market itself is the economies of scales are so out of whack. You got the FANG stocks that are holding up the market, and if you look at the advanced decline ratio, the market's actually in a bear market, So, with those variables going on, somehow the rubber band eventually, if it doesn't snap back, it's going to just snap, period. And then we're going to see some very extreme volatility. You'll probably see as the market turns, if you will, things happen a lot faster. You'll probably see a $10, $15 slide in the 30-year notes, or bonds rather, and 10-year notes over the course of like a week or two. And but what will that do to the value of the dollar? Well, that's going to give it a lot of strength short term, but it doesn't matter because the buying power of the dollar is still so weak and getting weaker, So it's kind of like a short term little grab. It makes us able to buy stuff from other countries really well, but how are we going to export stuff to the world as the dollar is getting strong? You know what I mean?
Yes. I know the number of variables in play, man, as we come into this year sitting at all-time highs, and we got 3 rate hikes probably coming, man. And it is interesting last year, like we were talking about it, pretty remarkable how wrong people got inflation last year. And what I keep reminding myself is that, all the projections this year are almost like a best case scenario, as in the projections from the Fed are that, we're back at 2% by next year for inflation and all those considered. It's kind of like a bull case, best case scenario. And I just kind of remember where we were last year because it is tough to see all of those influences waning. Companies
Watch
right
the
now
CRB,
almost
Tommy.
have. What's that?
Watch the CRB. That's going to be one of your biggest indicators. The commodities, almost all commodities over the course of 12 months have gone up 50 to 100%.
Yeah.
That's
all you got to look at if you're looking at inflation. I agree, man. Some of the core numbers that we've gotten on these inflationary numbers, Teddy, where they take out, right, energy and food, staggering core numbers, and we all know that food and energy are through the roof. So sometimes, man, you just got to use your head, folks, and listen, it's possible, right? These things can all wane. I'm hearing some, over the news where it's like, okay, supply shortages aren't as bad. Maybe the car companies are able to get chips a little bit better. But, man, we got a lot of hurdles to get over for 2022 as we come into the year right now. Well, Teddy, man, it was great to talk to you. We look forward to quite a year in 2022, and we come in with I'm going to finish it up, Teddy. I got a chart in here, crude, and pretty remarkable. Okay. Not a lot of people would remember, man, that we sat above $80 to like 100 for like almost 4 years, man, from the end of 2010 to almost 2014, to the end of 2014. We were sitting between $80 and $100. Nothing says we can't get back there for sure. Teddy, man, we appreciate the conversation. We look forward to talking to you next week.
Tommy.
Okay, have a great one.
Week.
Folks, check out Teddy every trading day, forex-trading-unlock.com. We'll be coming right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, welcome back, folks. We got the S&Ps right now down about 6 points, trading at 47.78. Jumping over to Disney. We have some Disney in my newsletter, Rocket Equities and Options, getting a little bit of a pop. It is interesting, the continued divergence across the board of winners and losers on this market with the rotation going on. Disney up 1.3% today. I say winners and losers, I mean jump over to chips. You got AMD trading lower, down 0.8%. You jump over to Intel, up 4.3% right now. You jump to Microsoft shares, down 2% right now. You jump to Apple shares, only down 0.33% right now. Salesforce down 5.6% right now. Back to Disney. So interesting here. You have ex-Disney duo buy stake in Will and Jada Smith's company. Kevin Mayer, if you recall, he was the guy that got passed over to run Disney, ended up joining ByteDance, which is the parent company of TikTok. Okay, was only there for 3 months before that whole storm of a mess erupted, and he left there. So you have Kevin Mayer and Tom Staggs. They've acquired a minority stake in Westbrook. So they paid $60 million for a bit more than 10% of the company. So you're talking about $600 million. This is Will Smith and Jada Pinkett Smith's company. Now, what's so interesting here is that they also were the investor. They are building a media company with funds from Blackstone. The two have been looking to invest in up-and-coming entertainment companies. It's interesting to see how this is going to change the world in terms of entertainment. You got these small production companies, and sometimes that's all you need. So they recently last year acquired Reese Witherspoon's production company at about $900 million. And the one I hadn't realized, folks, okay, is that Moonbug Entertainment, they also bought Moonbug, the company behind popular YouTube children's channels CoComelon and Blippi. I'm familiar with both of those in my house, folks. And let me tell you something, CoComelon, if you got young kids in the house and you haven't watched CoComelon, check it out, folks. I was unfamiliar, but it would make sense. The man who was running the direct-to-consumer part of Disney went out and bought this company, $3 billion, CoComelon, cartoons, quite a business to be in. They did that in November, but pretty cool how that whole industry is changing. All right, folks, thanks so much for tuning in, starting your day with me. Stay tuned. We got a replay of Basil coming up next. He did his show live at 8 in the morning, though, so we'll have Basil up next. We got our man Larry at 11. We got Fast Market at 12. You heard they'll be talking about Salesforce, among some other ones. We have our man Steve Rhodes at 1 o'clock, Dave White at 2 o'clock, and Tom O'Brien, my dad, live from 3 till 4. Thanks so much, folks. Have a great day.